Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you for joining in. And today, being Monday, the 26th of February, it's only 3 days till the end of the month, and we start a new week. So today, being a really slow day in the markets, we'll be having a bigger overview. So we'll be talking about the top things to know in the markets this week. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working just fine. Good morning, Edward, and thank you for joining the session. I'm doing just fine. Hello, Willie. Thank you for joining the session. So let's get things started. I will be starting with a brief overview of what happened in the markets last week. So the first thing to notice is that on Thursday, there was a big dive in the dollar index, and then around in the day, it made a recovery, traded sideways for Friday, and today you can see that the better part of the morning has been the dollar index weakening against other currencies. So we also saw some big moves happening with the dollar. So it started with gold, started with a strong momentum upside, traded sideways for a while before making a big impactful move above. So the last price action we saw on Friday was a strong rally before erasing some gains, and this is where we are. Then the US equity indices made a strong rally. So last week from Wednesday through to Thursday and Friday, there was a good rally in US equity indices. And this was driven by upbeat NVIDIA earnings. So the US 30 managed to form another all-time high, or the Dow Jones Index, as well as the S&P 500, which made a good rally. And now we have an all-time high that was formed last Friday. So the market has begun trading really slow today, but hopefully we'll be seeing some momentum coming into the markets as we continue in the week. So Brent oil prices managed to trade along this resistance. So you can see the good rally that we saw on Wednesday and Thursday. Once you go to this resistance, the market erased all the gains. So Friday there was a big sell-off, and today seems like a continuation of the same. So that being said, now we can look at the top things to know in the markets this week. You can see there's quite a good number of comments. Hello, Manabasto, Paul, Jeff, Johnny Duck, Dennis, thank you guys. Thank you for joining. So if you have any questions, just feel free to type the questions in the comment section, and I'll be responding right away. So I'll be starting by looking at the economic calendar, and I'll try to understand what are the key events to be expected for the week, what we should be focusing on. And once I cover that, hopefully we will be able to identify the top market movers this week. So there was a very nice article on Yahoo Finance this morning, and it basically highlights the key events to be watching this week. And this is the Fed's preferred inflation gauge, or what we call the PCE price index report. So a blowout earnings report from AI darling NVIDIA sent stocks to record highs last week. New inflation data will test that rally in the coming days. So the S&P 500, the Dow Jones, ended up 1% last week, while the Nasdaq Composite was up 0.6%. So the largest challenge to markets in the week ahead will likely come from the latest reading of the PCE, or the Personal Consumption Expenditures Index, which is the Federal Reserve's preferred inflation gauge. So this will be coming out on Thursday. As we cover the economic calendar, we'll see the exact time. Then we'll also be looking at a couple of earnings. So there are top companies that will be reporting earnings this week. So on the AI front, these are the companies that have been making big news because of the investments in AI. The market will be largely focused on a company called Salesforce, which basically provides CRM software to various companies around the world. And having added AI to their product, they have really improve and become the dominant CRM company around the world. So we'll be looking at a couple of retailers, including Lowe's. We'll be looking at Macy's, Okta, as well as Best Buy. So the last time an inflation report came out before the opening bell, a hotter than expected consumer price index report, or CPIA, rattled markets and sparked a stock sell-off. Meaning that in this case, we're expecting an inflation report this week. And if it comes hotter than expected, then we are likely to see the market going for a big sell-off. So that's something you should be concerned about going forward within the week. So a monthly price increase of 0.4% would be a noted increase from the 0.2% seen in the prior month. And it speaks to growing fears that inflation might be proving stickier than initially hoped. Notably, this would bring the 6-month and 3-month annualized inflation numbers, which had been tracking below the Fed's 2% target and above 2% per the Bank of America's economics team. So you can see from this chart here how inflation made quite a strong rally in 2021, managed to peak around 5.9%, and then since then inflation has been moving downwards, and the latest number for core PCE price index has been 2.9%. So annualized 6-month percentage change is at 1.86%, and this is lower than the Fed's expectations. So investors will be looking to see if the core PCE price index gets closer to 2%. So if it drops, then this could be something that is very much welcome for the Fed, and it would continue to the narrative that the Fed could go for early rate cuts. But then if inflation remains higher than expected, then the overall expectation is that the Fed keeps rates higher for longer, which has been quite positive for the dollar. So consumer comes into focus. Fourth quarter earnings season is slowing down, but a slew of companies are still set to report, including many in the retail sector. The week ahead will bring a closer look at the consumer with results from Macy's, Best Buy, and TJX, among others. To BMO Capital Markets senior analyst Simeon Siegel, the key question remains whether consumer spending is losing steam. At this point, he told Yahoo Finance Live, quarterly results have shown Americans are still spending on discretionary goods. There's this perception that because of inflation on the consumer staples items, people aren't buying discretionary, Siegel said. But I'm not seeing that in the results. So what basically this means is that there is that expectation that if inflation is high, people will stop spending on various products that last longer. But then what we have been seeing over the last 1 year is that people are still buying discretionary products within the US, and this is an indicator of consumer strength. So a strong consumer means that they buy more stuff, which tends to be inflationary. So the Fed's goal has been to try and weaken this purchasing power, and as a result, get inflation back to the 2% target. So on the calendar, this is what we will be expecting today. So Monday, nothing much. As you can see, it's low impact news. There will be a speech from MPC member Peel from the UK at 2 p.m. There will be new home sales data from the US at 6 p.m. And then a speech from ECB President Lagarde at 7 p.m. So she's due to speak about the ECB annual report 2022 in Strasbourg. I think I'm having a problem with my camera, so I'm going to mute that for now. So let's continue. So from the calendar, the biggest event today is the ECB President Lagarde speaking at 7 p.m. But then as we head into Tuesday, this is when we'll be having quite a number of news coming in. We'll be starting with national core CPI for Japan, and this will be at 2:30 a.m. We'll see the durable goods orders month over month at 4:30 p.m. on Tuesday, and CB consumer confidence survey at 6 p.m. on Tuesday. Then we get inflation data from Australia, and this is on Wednesday at 3:30 a.m. Before we focus on one of the top events of the week, which will be the RBNZ interest rate decision or the Reserve Bank of New Zealand interest rate decision. So once we cover this, remember the overall expectation is that the Reserve Bank of New Zealand will hold interest rates at the current level of by 5.5%. So any big surprise could cause some volatility in New Zealand pairs, and this could be a surprise either in the interest rate decision or the outlook that will be presented in the RBNZ press conference. So we'll also be looking at preliminary GDP quarter over quarter for the US at 4:30 p.m. On Wednesday. Then later on in the week, we'll get German preliminary CPI month over month before we look at Canadian GDP on 4:30 p.m. on Thursday, as well as the core PCE price index month over month. So as we approach the end of the week, we'll get Chinese data, and this will be both manufacturing as well as non-manufacturing PMIs. And then we start looking at retail sales for Switzerland, a CPI flash estimate for the Eurozone, and then we end the week by focusing on ISM manufacturing PMI. So that being said, that's what we will be focused on. And now we move on to try and understand some of the technical analysis that might be prevalent this week. And from there, we'll understand where the markets might be headed next. So just one moment, trying to figure things out with my camera. Just a second. All right, I think this has been fixed. So let's do the favorite part. I know you guys have been waiting for this. So the favorite part of the presentation is where we cover technical analysis and try to understand the potential targets where we could see some price setups forming up very well. And this will potentially present an opportunity where you could make something for yourself. And as always, remember a disclaimer that this session is not investment advice, neither is it a recommendation to trade. So I'll be starting with one, the UK FTSE 100 index. So from the 4-hour daily time frame, you can see that we already broke a major resistance. This area here presented a very strong resistance. But what we've been seeing with European equity indices is a strong momentum upwards. So after the market traded in this range, and I'm sure that all of you guys can see this range. This is a price action for a whole year. So now the market is attempting to break towards the upper side, but there is still yet another resistance somewhere around 7,755. So I expect that the market could be going to test the area again. So there's still more room for upside momentum. So potentially we could be seeing the market gunning for another high, and this could be playing out this week. So I'll be on the lookout on the current price action from the current level, and hopefully we will see the market going for some momentum here. So let's wait and see to see if this momentum holds, and then this kind of recovery continues towards 7,750. So as the dollar index seems to be trading sideways, yes, there has been about 5 hours of momentum downwards, but the dollar has been pretty strong, and it made a very strong recovery last week after the big sell-off here. So potentially we could be seeing the dollar index now starting to move higher. So notice that this trend line has already been broken, and now the dollar index is basically looking to be moving higher. So with this kind of transaction in the market breaking to the upper side, I expect a strong dollar this week, and as a result, we could be seeing the dollar completing the journey here and getting to the previous high of around 150.866 on the USD JPY pair. So as for Euro USD, we can see there was a very strong momentum where the euro was gaining against the dollar. But then immediately we go to this high, the market erased the gains, then traded sideways on Friday. So a potential momentum further downwards as the dollar continues strengthening in the market. So there is a good chance we could be seeing the dollar taking some more strength and moving further downwards towards our identified target around 1.0727. So for pound USD, we have been seeing the pound really struggling to make new highs against the dollar. So the high that we saw on Friday was lower than the high that we saw on Thursday, which is a key indicator of potential weakness in the market. So if we continue seeing the upwards momentum, then the area to watch will be the new trend line that is shaping up from this area here. So we could be seeing the pound continuing to push higher, but then the moment it reaches 1.269, the idea is now to start looking for short selling opportunities, because this new trend line is showing some form of weakness happening in pound USD pair. And of course, we have seen the dollar being strong last week, and it could continue that strength this week. So if the market pushes higher, the idea is to look for a potential short selling opportunity. So for USD CAD, it's the same thing, but what we are seeing is the weakness in oil markets being reflected in the Canadian dollar. And as a result, the dollar has been pretty strong. It made an impressive bounce here on Thursday. On Friday, continued pushing higher. Today, we saw the market open with a gap downwards, crossed the gap and is still pushing higher. So the original target remains the same, but the dollar continues gaining towards 1.35348 against the Canadian dollar. So as for gold, we are seeing some strong momentum, and an idea that we had seen last week play out is this horn kind of formation where we have a triangle that is inverted and the swings are getting bigger and bigger. So now looking at this way, you can see a market that is only increasing in momentum. So since Friday, when we got to this high, there was a pullback that did not get all the way down to the previous low, and now the market is attempting to push higher. So now today, even though there is low momentum, I expect gold to continue pushing higher and perhaps retest the high that we saw on Friday of $2,041 per ounce. So as for the equity indices, after the Nasdaq got to this previous high, it formed an all-time high, but there was an immediate rejection, and then the prices started moving further back downwards. So notice how we are right back at the same trend line that we have been observing since the beginning of the year. So the trend line is right here. The market seems to be bouncing from that. So if I zoom out, you'll notice that the trend line started on the 4th of January. The market managed to break below that last week, made an impressive recovery on Wednesday and Thursday as a result of NVIDIA earnings. And once we go to the previous high, the market pulled back downwards. So this means that we are still yet at a very important point in this chart where the market could either bounce from here or break towards the lower side. So if there is a bounce, the target is easy. It's just the previous high. But then if there is a potential break, then this could potentially lead to a big sell-off, and an important key price level to observe is somewhere around here, which was a previous support. So if the market breaks that lower trend line, we could be seeing a drop to this area. So for the Dow Jones, it's very important to know that when the market opens today, one company will be removed from the Dow Jones index, and that's the Walgreens Boots Alliance. So once the company is removed, it's going to be replaced by a much stronger company, which is Amazon. So Walgreens Boots Alliance announced a 3-to-1 share split, which basically meant that the company now doesn't qualify to be in the Dow Jones Industrial Average Index, and as a result, it will be replaced by Amazon. And Amazon being a much stronger company, then it brings on some form of bullishness. So we will be expecting to see some form of activity coming in on the US 30. So having seen just another all-time high happening on Friday last week, then there's a good likelihood that we could be seeing an extension of the same once the market opens. So an immediate target is just the previous high, but this is not a limit. The market could potentially move even higher and form yet another all-time high. So for the US 500, there was a nice pullback on Friday, but you can see there's some form of bullish momentum coming in on the London session. And yes, we could see yet another all-time high being formed today. So we have to be on the lookout for this one. The market potentially bouncing from here and making yet another rally and forming another all-time high. So Brent oil prices seem to be really weak. They completely failed to break above $82.9 per barrel. And now we are on a downswing. We have already broken last week's low, the previous week's low, and now the other week's low is all the way down. So we could be seeing the market gunning for $76.79 per barrel. So this is a potential likely outcome that could be happening this week. So for the Euro 50, we are only seeing the market gunning for new all-time highs. So now after the pullback we saw on Friday, as the London session opens, you can already see the market pushing for another rally, and this could be extended this week. So I expect to see some further upside potential. So as for Bitcoin, there was a very strong pullback last week. So the pullback made sure that Bitcoin remained within the range. So what we are seeing is the range getting an extension downwards. So instead of having this as the support is moving slightly lower. And now it's $50,704 per Bitcoin. So as a result, now you can see that the market is thinning, meaning that the volatility is even much lower. So from here, you can see we are no longer getting to these highs. The market is finding resistance around here. So it seems a little bit bearish, but the idea is to wait for the market to potentially get to this area in order to identify a good enough long position. So the idea is to trade on the edges, not in the middle. So if the market gets here, then we start looking for buys, especially if we get some of these tails that indicate a strong rejection of lower prices. So for the French 40 index, still the same thing, a very strong momentum upwards. So even after the market opened with a gap, now we could be pushing to close this gap, and the market moves even higher, forming another all-time high. And for the USD trading against the Swiss franc, we saw a very strong recovery last week, and now I might be expecting to see yet another continuation. So that hasn't happened yet. So if I was to clean up my chart here, what we would be having is a market that has been trading sideways for a while. And if I just highlight it, then it will make more sense. So we can say that the overall price action during this period was a sideways momentum with a with an attempt to move prices lower that failed on Thursday last week. So now we await and trade only on the edges. We don't want to be trading inside where there is no volatility. So we wait until there's volatility, and once the market breaks either of the trend lines, then we start looking for opportunities from there. So that's the end of my presentation. So I'll be focusing on your questions as we approach the end. So just scanning through. So first question I'll be responding is from Owen. Why the weakness in DXY? I thought the Fed would hold higher for longer, making DXY stronger, or has this changed? I share the same sentiment. I expect the dollar to be really strong, and that strength is expected to be seen, especially in the bonds markets, as the yields continue to strengthen. So the DXY is expected to make some form of recovery this week. So there has been also surprises happening across board, where inflation has also remained sticky, meaning that these other economies would also have to hold interest rates higher for longer. So we saw it happening with the Eurozone. Inflation is still very sticky in the Eurozone, sticky in the UK. So the bet was more about the direction of interest rates. So if there are central banks that were expected to be cutting interest rates early, such as the Bank of England and the ECB, the fact that now they are changing and now they are considering holding rates higher for longer, it doesn't create the necessary divergence to lead to an all-out strengthening of the dollar. So per se, I expect the dollar to remain strong and to hold its ground. So the strategy right now might be to look at the DXY when it's really weak and then bet that it will make a strong recovery, and that will hopefully lead to a continuation of the rallies that we have recently seen with the dollar against other currencies. So looking at the DXY here, you can see that this bearish momentum was only short-lived, and now we have broken the upper trend line. And if you go to the forward chart, it basically is within limits. So from a longer term time perspective, this is what we are seeing here. So market that really attempted to break towards the lower side, but then found support here. So it's not like we're in a bearish trend. The overall trend is still bullish for the DXY, and we expect to see this continue over this week. And now we just saw a nice pullback that would allow us to potentially buy the dollar against other currencies, and this is the right movement that we are observing here. So expect the dollar index to at least make a bounce from here, and if that happens this week, then we should be seeing strong rallies. For instance, USD JPY could potentially break the resistance. For Euro USD, it could break the support moving downwards. And for Pound USD, you can already see the weakness in the bullish momentum. So we could be seeing the market now pushing down lower. So I hope that answers your question. Morning, Rufas. Thank you for another educative session. Thank you, Bure. FVG and imbalances. I think our time is almost up. We only have 1 minute. Good question here from Lamik. How do you identify a change in direction of the market structure using key lows? You try and understand the sequence of lows and highs, and that can kind of tells you where the market might be headed. And I think from the dollar index, you can see the lows, for instance, in the dollar index. But from the forward chart, you can notice that this low here was strongly rejected. So by the size of the tail, you can see the change in direction. So I think a good study would be based on the pound. So notice the lows are getting higher, but now a change in the trend is being noticed using the key highs. So the highs are no longer forming high highs. If you look at this sequence of highs, they are getting higher, but now they are getting lower, which is an indication of the trend that is weakening, and potentially you could be seeing the market breaking the lower trend line. So I hope that answers your question. What do you mean by trading the edges? You don't want to participate when the setup is in the middle. You only want to make a market entry when you are at resistance or support. That helps you optimize the performance of your trades. So thank you very much, guys, and I hope to see you on the next session. Awesome.